money miners. Boys, thanks for holding the fort for a few days. Much bloody appreciated. We come and leave sometimes, but Axis never leave anyone. Axis Mining Technology, 0 annual leave, 0 sick leave. Someone is on the phone as the trusted advisor for drill hole survey instrumentation. Full coverage all the time. I suppose we're like that too. If one of us, all of us don't go.
People asked where you were, Matty, and I said, you didn't know where you were because you didn't have a gyro, north-facing gyro with you.
No, I needed some north-seeking guidance. Tell you where I was, New South Wales, where vapes are heaps cheaper. Anyway, so I've loaded up while I'm there. I'm on fire.
Bit of arbitrage. I love it, Matty.
Oh, I love it. Right, what do we got today? We've got a bit of Lotus, bit of bloody uranium over in Botswana. Boys, you're getting right into the DomGas world with and a bit of MinRes and all the like. Bit coming out of Roger Cook's gob today about domestic gas. So
yeah, and the overhang there is MinRes looking for a partner to recycle some capital.
Yeah, beautiful. Now, JD, you plucked one out of thin air today. Good old Kingsgate, who I remember.
Yeah, to be honest, mate, we haven't gone too deep. I spent most of my time digging into DomGas, but yeah, Kingsgate leads to a bit of an interesting chat about how lucky our ASX miners juniors have been in Southeast Asia. It's a bit of a region we haven't focused too much on, so I think we and sort of Trav in particular will run through a couple of the names there, hey?
Do you use the word lucky ironically?
I did not at all, mate.
It's a mixed bag.
Oh, well, lucky. Speaking of lucky Lotus, up 10% on the spark chart today. Scope and study released. We're going a bit of uranium to start it off. But by the way, dedicated uranium episode while I was away. Very impressed, I would say.
I think there were a couple. I
didn't even request it.
It featured in a lot, yeah.
Yeah, it's freaking brilliant. So
can't get enough of the green stuff.
Oh, no. Bloody Lotus. So released the scope and study today for the Letlhakane project. Probably something like that, Letlhakane. I'm saying that's it. That's what it's called now. In Botswana. So this is the one they're sort of studying, potentially developing in parallel with planning the restart for production at the Kayukera project in Malawi. That's scheduled for about 2025. JD, how do you say that properly?
No, mate, let's just go with your one.
Kayukera. Just say it quick. So $34 in the bank they had at 30 June, but looking like they'll need about 750 Aussie bucks for this Letlhakane project. So this is the project that came in from the ACAP side.
Yeah.
After Lotus merged with ACAP October last year. So
where would you rather build a project, Matty, Botswana or Malawi?
Oh, Jesus Christ, that's a bloody tough one. JD, you've probably been there on holidays, mate. Where would you pick?
If I'm picking between the two, I'd go Botswana.
Every day.
Yeah, every day of the week.
Yeah. I mean, CapEx is a factor, of course, but yeah.
So this project hosts a 118 million pound resource at 345 ppm, big low grade, but 71% of that is inferred. So, just wait for the end. I've got something interesting at the end. That thing is probably what you're going to butt in and say, and we'll talk about that thing at the end.
No, mate. I'm keen to see where you go with this one.
So as I said, $750. That is what's that going to give them? So this is it's going to be like this 2-stage heap leach project. So then a solvent extraction to remove the impurities, then an ion exchange columns, and then go through the process to produce yellow cake, uranium oxide, they say. So it doesn't look like they've included in the flow sheet the next step to convert the uranium oxide into U3O8, which is what's preferred by the downstream converters. This is the actual old school yellow cake from what I can see. So, so that heap leach, effectively, for people that don't know, just a big stockpile full of friggin' dirt, pour acid over it, instead of actually chucking it through the mill to get to start leaching it out. So now they're posing 3 scenarios for this study. So they had this base case life of mine, but then they're talking about like a lower early strip strip ratio scenario where they sort of target areas that don't require as much waste removal, and then a bulk scenario to friggin' just rip a shitload out of it at about 7 to 9 million tonne a year. So CapEx is the same across all of them, all produce at about 3 million pounds per annum. The early low strip ratio one produces about 2.7. But look, big focus in the study, a lot of wording around reducing the need for drill and blast for the waste excavation, like better understanding about how much free dig versus drill and blast, even talking about potentially looking into using drag lines for the waste removal. So drag lines are the big friggin' huge humdinger waste removal devices, you'd say, they use in coal mines for the strip mining. Huge. So, and because, coal's just a flat-lying seam, and it's like this is sort of similar, like a flat-lying seam of uranium with a high strip ratio. So it may be applicable, but obviously a bit of capital to bloody get them going. They're freaking huge. It's funny when you see drag lines operating, you think the bucket's not that big and you're like, geez, that's a shitload of dirt for that tiny bucket. But you go stand next to the bucket, it's like a shed.
I think I've seen like a picture where it compares like a jumbo jet to these drag lines, and they're just like get dwarfed by
huge piece of machinery. So and then they're also talking about investigating the use of in situ recovery for the Gorgon deposit, because there's multiple deposits within this. It's lower grade, it's thicker, but it is deeper with the higher strip ratio. So it's all pretty open-ended, you'd say. So, and they have in the CapEx line items a bit over 100 million Aussie, I'm talking Aussie dollars here, for an on-site sulfuric acid plant, because they're saying they can import sulfur and then use that to produce sulfuric acid on site, because it's a heap leach operation. So, pouring acid through the big stockpiles. Acid consumption is said to be around 50% of the total life of mine processing cost. So similar to, you can imagine, it's the same as an in situ recovery deposit, where I think that would get recycled more. I'm not sure about that. I think because the barren solution goes back into the paleo channel. I'm not sure if heap leaches are the same, but it's effectively the same process. The acid's just leaching it out of the stockpile. So, because like Langer Heinrich, for instance, I think looked at their flow sheet, they've got their leaching occurs inside a leach tank. Yeah. So there's probably more capital to install like it within the processing, and the metallurgy is probably different. So this is the other option. We don't see it as much over here.
Are there other examples where they've got a similar flow sheet to this with the heap leach and the IX columns?
Not sure.
Yeah. First I've heard of it, it probably exists somewhere.
Yeah, heap leach uranium. Tell me, someone, if you're listening. But no, I do not know, because they have sounds like, and they're talking a lot about and a lot of the stuff they're going to look into is because it's got the solvent extraction, then the ion exchange. I think the solvent extraction is to remove a lot of the impurities. So they're talking about how they can actually heap leach it and then direct feed that into the ion exchange and still, get the same result and take away that bit of CapEx for the solvent extraction and everything. So there's a lot of more work to do on this. It's all pretty early by the looks. It says they have current permits in place, which include a mining license, enviro license, exploration license, radiation license. Licenses are good these days, they reckon. But there's a comment these might have to be probably updated with the regulators as the mine plan is updated, because a lot of this is, and it was interesting how quick, really, because I think APAC, the processing side of things talks about the flow sheet was developed in 2015. So, and then obviously the Lotus ACAP merger was only last year. So they've actually got the study out pretty quick compared to how long ACAP actually had this project and they didn't even release a scoping study, I don't think. So
might have something to do with the secret you're going to reveal at the end.
maybe that's it. So as I said, early stages, lots of testing and studying to do for optimise and everything I've discussed. So,
Matty, I can see this. Just pulled up a study by the International Atomic Agency. They said less than 1% of uranium currently comes from heap leach projects. There's no year on this thing, so get into that later, but it's not a
live research by JD. Bloody,
that's
mate,
it.
you're like a chat JDP or something. That was bloody brilliant. Mate, oh shit, I forgot. Sorry, I've been back in mining world. I forgot to put the MPV and IRR in. Sorry, I forget the finance shit.
I care about that.
Yeah, right.
You talking about the capital?
Hold on, let me just go back to it. Scroll through. Where is it? Last page, 44. Here it is. NPV post-tax. To be determined. IRR percent. To be determined. What the actual fuck, eh? Yeah, there seem to be every other bloody number in there in terms of costs. I think you mentioned, Trav, there may be some royalties that are undetermined.
Well,
but couldn't you predict, like give a
range? I don't know.
A range for that. But yeah, I've not seen since we've started, I don't think I've seen a scoping study come out without an NPV or an IRR.
No, they quote C1 costs, which don't look horrible, like that, but why would you quote C1 cost but not an all-in sustaining cost? Like, I don't know, maybe the only thing I could think is like a royalty, and is it that punitive? I could honestly just got no idea. I'm just confused.
That's right. So we don't know if it's positive or negative. Don't know if it makes money or not. I'm sure someone's going through doing a bit of a dummy up today to figure it out. If you have, let us know. But
this is the thing, the mine schedule. They give you a mine schedule and they actually tell you the mine schedules for the 3 cases were optimized to maximize NPV.
Yep.
so
maybe that's why there's a lot going on with the waste removal and all the optimizations and the free dig, and might be a bit of tweaking going on. But because it is.
But what completely agree. There's something between, your cash cost and your all-in sustaining cost that's missing, which is why they haven't spat it out. And, if you assume something kind of standard in there, it's a decent kind of margin on £3 million per annum, which just makes me think, why wouldn't you just wait till you've got that number and then release the scoping study? I don't know. I'm scratching my head a bit.
I haven't seen it. I have seen some. I've seen a scoping studies just pulled when the economics are bad. They just sort of they'll either postpone it or they'll.
Yeah, that's a classic.
They'll go, we're just going straight to PFS now, or they'll say we're going back to exploration. I've seen a gold developer at one point. They released some details of the scoping study, but instead of putting the numbers in which you wanted, they just said it's currently uneconomic at current prices. I've seen that one before.
That's better.
Yeah, but I haven't seen this. I've never seen this.
Oh, I don't think. Well, it's like the fact the stock's up 10%. No one's must have figured out it's negative, the MPV. So it is up. Someone would have had a crack at it. So if anyone has got the model going, bloody absolutely no hope of getting CRE insurance to broker policy for them without an MPV or an IRR. Like that is, mate, I'm Lotus, I'm telling you before bloody Dave Ads and Tari get onto you, like, mate, they need an MPV and an IRR. They don't just insure anything. They go through these studies like a bloody fine-tooth comb. So you don't become the expert in African and international mining insurance without having some standards, Travis.
Mate, the more complex, Tari loves that stuff.
He probably likes this actually. He's I'm gonna figure out the MPV myself.
I can assure you.
He loves it. He loves a challenge. It's just
give me a range.
MPVs are just the water off a duck's back for Tari.
It's above 0, isn't it?
Yeah, well, but you think of, as you said, I think the same amount of percentage scoping studies with MPVs without MPVs are the same as the percentage heap leaching operations you said before, JD. But, mate, all those other studies with MPVs and IRRs, which we think is all of them, I would suggest that you call CRE to go over them with a fine-tooth comb for you. They'll bloody have a look at your existing policies. You might be missing something. CRE tell you what it is.
For free. They'll tell you that for free.
For free.
Review it for free, yeah.
Just for a bit.
Yeah.
They might get a bit of money off you later. Should be free for a while.
They'll tell you for free. And then
they'll tell you for free.
Yeah. And then you can get compensated.
There we go.
All
Good
right.
stuff. Right, DomGas, bloody domestic gas and, of course, MinRes.
Of course. We've got to tie them in somehow, Matty. So two stories to chat about here, guys. Firstly, what's going on in the WA DomGas policy, and then secondly, MinRes and their Perth Basin assets. So let's start with the WA DomGas. This is super important to WA as a state. You know, the cheap energy underpins a lot of the industry, the likes of Alcoa and stuff, West Farmers, Coogee Chemicals, all these sorts of guys. They rely pretty heavily on cheap gas. And, you know, we haven't seen much development in that space for a long time because of the policy that came about in 2006. So essentially, and that's onshore that I'm talking about there, but essentially what's kind of happened is that the onshore gas explorers, developers, producers, they want to be able to export their gas, right? Because they get a better price in the overseas market than they do in WA. But with the current policy, aside from Beach, they're a bit of a quirky example. No one can export, and that has, you know, put the incentive to develop anything new at a bit of a stretch, right? Nobody's going to no one's incentivized to develop anything new because the economics just aren't that good. They can't get the funding to do it. So there's a bit of a misalignment with the politicians out there at the moment who simply just want cheap energy for the households in WA, and the companies have kind of come second fiddle. Obviously, this only works for a while. As the resources kind of work their way through, you get to the point where the energy costs are going to kick up quite a bit. And that's the inflection point we're kind of at. So the state government ran this parliamentary inquiry. As you'd kind of expect from something like this, it took almost 60 weeks, and then there was another 9-month delay. But essentially last month, we got a bunch of recommendations that came out of it. And what they essentially said was we are getting to the point where we're going to have a substantial shortfall, you know, potentially starting this year in 2024 for quite a while to come, you know, throughout the next decade, really. And that the policy that we have in WA is no longer fit for purpose, and it needs to be adjusted. So
yeah. And you see the likes of West Farmers every strategy day, they're kind of flashing up this slide showing that their chemicals business is getting more and more uncompetitive because the WA DomGas price is going up because of the depleting reserves and the lack of development of new assets and such.
100%. So it's worth kind of noting, because I think we've spoken a bit in the past about the East Coast gas market, and for people that are a bit new to it all, it's a pretty different setup. You've essentially got a small number of producers onshore in WA, and you've got a small number of pretty large users who dominate the kind of system, exactly like you say there, mate. West Farmers, and like I said before, Alcoa and stuff. So just looking at all the different kind of parties involved is really fascinating, and it's a pretty classic example of just looking at the incentives, and you can kind of see how these people are aligned and how they're going to act. You've got the politicians, like I said, they just want cheap gas because ultimately that will help get votes, keep them in power, or, you know, get them in power if they're the ones that can make that change. Then you've got the developers, you know, MinRes, they've been pretty bloody vocal on this. Strike, Warrego, Beach are in there with a bit of a caveat, who want to be able to export so they can get better economics on their projects. And then you've got the DomGas Alliance, which is all the companies that, you know, operate that kind of heavy industry in WA. And they're arguing that there's limited potential from the Perth Basin, and that any exports would really damage WA because, of course, they want super cheap gas. They want it all coming. Now, you know, you could argue that could come back to bite them in the future if nothing else is developed. But as things have sort of stood for a number of years now, that's how everyone's kind of incentivized.
Yeah, right. So what are we potentially going to see on the policy front, JD?
So it's been a sort of long time in the making, this, and it's probably worth noting, Maddie, that it's not a piece of legislation that we're actually talking about. The way this is kind of put into place is actually through contracts with the gas producers and the state, which make it kind of, you know, a bit iffy about how it's actually been implemented and how it's kind of been policed in the past. And as a bit of a side note, one of the recommendations in this enormous report that came out was that it should actually be put into a kind of legislative framework so everyone can see it and it's more transparent. And that sort of ties in with another recommendation that all these guys are going to have to chuck up an annual domestic gas statement that pretty much says what they did for the year, how much of that went through. For example, you've got on the offshore side of things, Woodside being accused that they didn't actually abide by the 15% that they've got to put into the WA market. And it's a bit opaque, which is what a lot of people have kind of been saying. But we'll put that aside for a moment and just focus again on the onshore, because that's the kind of key talking point here. What's sort of changed is that they're given this 5-year window where 80% of their gas is reserved for WA, which means 20% can be exported, which would imply the economics of the projects are kind of better. There's also this use it or lose it provision that is encouraging all these guys to actually do something, actually develop the assets, put in, exploration wells and all these things, which is, of course, a bit more of an expensive operation compared to the miners that we kind of talk about.
She's a bit different to chucking an RC hole in, isn't it?
Is it very different to the rates?
Like $40 million or something for a full length hole or something like that.
Yeah. A bit different to what Cadre would charge you, mate.
Yeah, I know.
That 20, like that 5-year exemption when you're allowed to export it, does that basically so what happens at the end of that 5 years? Are they then prohibited from exporting anything, or is it a lower number that they're allowed to export, or what happens after that?
It just goes back to 100% being reserved for WA, which is it's one of the reasons opponents of this have kind of said it's a short-term solution. They're saying is it really going to be enough to incentivize the investment and the further exploration if it's just going to roll back? So yeah, it just goes back to 100%, and some might argue that's a bit of a hole in the policy, implying it's a bit of a short-term fix. But no doubt about it, the winners from today are Strike, Beach, MinRes. I mean, if we cast our minds back just I think 6 odd months ago, you saw Chris Ellison saying we are not going to develop Lockyer without a 5-year at least exemption from the state government. The economics just doesn't stack up. Perhaps we'll develop it, but purely for our own use, which is a way smaller scale type of development than they would otherwise do if they can sell it and make the economics a whole lot better.
Have you ever heard Chris kind of, I wouldn't say the word brag, but sort of boast about the influence that he was able to have to be able to allow to export iron ore from Onslow? And we started with just a 5 million tonne allowance, and then this, and then the Premier changed, and we got it up again and up again and up again. You can kind of read the tea leaves a little bit about what might happen in 3 years' time. I imagine some lobbying will go on and try and extend the ability to export gas.
You could argue it's pretty questionable the dinners and the guests and stuff that they've had by putting in good donations. It's interesting how the world works, but it's not a world that we operate in yet, fellas.
What it's because it's only as you said, 20% of the bloody output. It's not huge, but
you get so much more for that, though.
But how much is it? Double the price?
Yeah.
Yeah, so you're effectively getting 40% of it exported at the same price.
Yeah, and then of course more cash earlier makes the economics of the whole thing.
Yeah, is that how much it is? At least double.
Yeah.
Yeah. Wow.
Yeah.
Yeah, it's quite a bit more impressive, which I think leads us in, fellas, to chat about MinRes and the M&A. So obviously on Monday, they came out with a maiden gas and oil resource statement. But a bit before that, at the back end of August, we saw Data Room sort of picking up rumours that Mitsui, who are, of course, already in the Perth Basin, they're running the numbers, running their eyes over what MinRes has got, obviously with full awareness of the kind of situation that MinRes is in. And it's worth saying the numbers that MinRes came out with on Monday, they're pretty early stage numbers. They need a good bit more work to be done on them, and that it was pointed out that they're not independent yet. But it was interesting to see at the bottom end of that announcement, MinRes is already considering options to realise greater value for shareholders, talking about JVs, partnerships, partial sell downs, or a full sale. And then we kind of get this Data Room article, I think yesterday afternoon, from in the Australian again, saying Mitsui have lobbed a lowball offer. So obviously no details, but we know there's a number of parties that would probably be interested in this. They've got assets nearby, the likes of Gina, Strike could make sense. Beach, even PE groups like Carlisle were mentioned. And, that could potentially be a bit more attractive given they're not going to be paying with scrip. Gina's got bundles of cash. So I'm sure there's sort of preferred parties in how they could kind of structure something. But on the surface, what do you guys kind of think? What are the likelihoods? What's the likelihood of Min's doing something here?
Yeah, it's been a talking point of Chris's for a while of attracting a partner, and basically figuring out a faster way to develop this, given their own kind of growth cash flow dynamic. Like, I don't think there's any uncertainty about the pathway forward that the market's been expecting here. I've heard Mitsui is short gas, and so they might have be the bidder that can stump up the most. That's something that I've heard.
Short as in they need it, or not short they don't like it.
They've got obligations.
The other kind of short.
Yeah, that's short.
And I do, like, whenever you see a sale process off the back of the internal estimate sort of numbers or whatever, it's like I'm sure the established players who live and breathe this stuff, they'll do their own numbers as opposed to just kind of take MinRes as gospel.
100%. I do wonder from the perspective of just looking at MinRes for bloody ages, people have always just said it's complicated, and even the people that are long the stock, they've said other people don't quite understand it because you got lithium ion ore, you got mining services, you got energy, all wrapped up in one. So there is a potential layer of the business being a bit easier to understand for folks. I mean, absolutely no reason to think Chris would sell the energy part of the business just so people can wrap their head around it a bit easier. But it is another sort of layer of the conversation, I find. Do
you think the energy side, the gas, would have the least amount of potential future upside for MinRes in terms of a cyclical nature of what they're actually, where the coin's coming from?
I like the energy business.
Just because it's in WA?
No, but because of the lack of investment we've just spoken about, you'd think the economics over time can get better and better. I mean, mate, you become one of the few people holding the cards, right? And if you've got these businesses that are bed down with investment made, they're going to need it. And they'll pay up.
It's a proper infrastructure play as opposed to, like Chris talks about it, the mining services business as being an infrastructure-like business because they're long-term contracts with low-cost miners. I believe that an energy business will be a proper infrastructure kind of can be a proper infrastructure business as opposed to mining services.
Need the government on the side, which I'm sure a couple of dinners won't get them over the line, eh? As you said, JD.
There was another one just last night about him telling Albo to get back in line, or get his party back in line rather, and just take a leaf out of Roger Cook's book, saying the WA government are doing a good job now that he sort of got them in line.
What do you reckon on price, JD? Assume a 50% sell down. Right.
Well, mate, I've not really my area. The numbers we'd kind of seen were 500 plus, but given the mark down on kind of where they're at and how early stage, sort of 300 to 400 ish would sound okay, but really that's coming from a limited sort of basis. What do you kind of think?
I think I saw, again, I'm not an energy expert, but I saw that, I think Sol Kavanagh, he estimated 500 to 800, but probably the lower bound of that range.
Yeah, I saw that.
Yeah.
All right, let's talk about a bit more hard rock mining, get back into our sweet spot, fellas.
JD, Chattree Gold Mine, old Kingsgate. I remember Kingsgate from when they had the Challenger Gold Mine down in South Australia. But now, down 9% on the Spark chart. Market didn't like the updated production guidance and outlook, it appears.
No, mate. So like you're going to say, there's a real history which we won't get into today, but market didn't like it, down 9%. What they came out with was FY25 numbers and a FY26 through to 28 outlook. So, the numbers we're kind of seeing here are all in sustaining cost, a bit over US 1,700 for the financial year we're now in. And then gold equivalent, mostly coming from gold, about 90,000 ounces for those listening in.
Well, then you bloody if you got crap guidance coming out and the market's not liking it, means you need more ounces, means you need to find more ounces wherever you are in the bloody world. Even though that K-Drill are goldfield specialists, I would say they'd go anywhere in the world because you'd pay to get them overseas, nearly. I think.
I got a question for you, Matty. What's a good shift of drilling? If you just like, how many meters would be good in just
hundreds?
Yeah,
just hundreds. But it's not about the quantity; it's about the quality.
Yeah,
and we've talked about over and over again the bloody sample management, QA/QC, gold star rating that K-Drill have. They've shown it in the goldfields. Why can't they go across the world? So
I heard a rumour. Ryan did a 1,000-metre shift of quality meters
and knocked off at 4.
Yeah,
and knocked off at 4.
Had time to have a game of chess at the end.
Mate, I heard Drew Harvey did 16 meetings one day. BD.
16 meetings.
16 meetings in one day.
Wow.
That's the care they have for clients. They want every bloody company out there to have the ability to engage K-Drill. So I'd suggest get in line. Have one of Druba's 16 meetings. Go meet the boys. Get them drilling some holes for you. You just will not regret it. Anyway, the guidance. Anyway, back to Kingsgate.
Now, like you say, Matty, Kingsgate in Thailand, capped at 320 million bucks. They've got 40 odd in cash and 73 in debt. So interestingly, in July, they sort of revamped their debt. They paid out their old debt, signed up again with Nabari, US $35, paying SOFR plus 7.75% per annum. Doesn't kind of stop there. There's up to 9.3 million warrants going out the door, sort of at least roughly 7 million going out the door. But like you say, Matty, they got smashed today, down 9%. If you zoom out a bit, it's a bit of an interesting journey, right? Because they actually had a real good first half of the year. You can see on the Spark chart there, gone from sort of $1.20 through to $1.80, and then they've sort of given it all away just quickly. So like I said, we didn't really have the time to dive too deep. This one is sort of stuck out, just comparing the value against all the other WA producers. If you do a rough sort of EBIT calculation on the numbers, FY26 through to 28, potentially up to a US $1,000 margin, roughly EBITDA, then take away your D&A, your interest costs and your corporate costs and all these sorts of things. But it's definitely one worth looking into. But we got a bit sidetracked looking into the track record of the ASX companies wider in the Southeast Asian part. And I'll flip over to you, Trav, because you've got a bit of familiarity with some of these names. I'm keen to hear how you think they've fared and what the prospects are for these guys going over to Southeast Asia.
I'm actually not as familiar with Kingsgate, but it's been on my radar to look at for a while. I think it's kind of stuck in my head because I'm pretty sure Jeremy Raper mentioned to us that this was the company that went through like an arbitration process at one point, and instead of opting to get the pretty juicy kind of cash settlement or payout from arbitration, they just wanted the mine back, and that wasn't the outcome that Raper wanted. Who was, I think, involved in some sense of activism back then. But
that is part of the colourful history. Yeah.
But it's definitely been on my radar to look at, and just gonna unfortunately keep it on my radar to look at because I didn't look at it too deeply today. Instead, I want to talk about those ASX like companies. Like there's just been a colourful history of the ASX companies with a gold mine in Southeast Asia or a development project, and like the outcomes have just been so like bifurcated, so different. Take for example, X64 or 1064. They used to be called Medusa Mining. They had that Koyo mine in Philippines, and there's like this whole 249D saga last year. I actually appointed voluntary administrators. There was like a restructuring framework that was agreed in March of this year, but they don't look any closer to coming back to trading on ASX because every month it just sort of seems like things are extended longer and longer. And so like that's one where your shareholders are probably left with question marks
We spoke about that one like a year ago, I think, and
we did. Yeah,
wasn't there something like $100 in
US dollars?
One of the
Philippine bank account, but it was in the JV. I think it was.
Exactly.
Yeah, that one.
Good stuff.
Yeah, and do you know who? Like, so when they appointed administrators, I'm pretty sure they appointed PwC, and it was the lead like guy there who basically quit his job at PwC to become CEO of it. Anyways. Then there are a couple of advanced gold development projects in PNG, which has been a challenging jurisdiction. You're a fan of PNG and Porgera, Matty.
Yeah, because what are they? Do they fall sort of under like the Pacific, but tying Pacific in with Southeast Asia?
I'd call it all Southeast Asia. Yeah. That's what I'd call.
Just see the as a side note, the horrible stuff in Porgera overnight,
mate.
Awful.
Exactly.
Oh, what happened there? I didn't see that.
Like 20 people. 20 people dead, and just kind of like tribal fighting and things like that.
Oh God,
it looks really ugly.
Very awful. Yeah.
So do you remember Woodlark Island, Geopacific's Woodlark Island? They were a development project, did the DFS. I think in 2020 they got like project finance from Sprott to build it, and they sort of started construction and everything. And then like they weren't far into construction. They sort of just pulled the pin because they realized costs were going to be way, way bigger than they actually factored into their funding. And so things just sort of like fizzled out there. And it's one of those Delphi stocks these days. You always see those good guys are trying to give that project a new life in the gold bull market, I think. But there was also Misima development project in PNG. This one was kind of interesting. It was the focus of Kingston Resources, not Kingsgate, Kingston, a few years ago. I think they must have seen the writing on the wall with the whole dynamics in PNG. Because they picked up
decided the Cobar
exactly
a better place to operate.
Yeah, they picked up Mineral Hill Mine. I think in 2021. If you go back even further in time, I'm sure there's some money miners out there that have like some battle like wounds from Indochine, which
Indochine, yeah. Oh mate, half of ACM tipped their money into that because they thought they were getting a contract there, and it just didn't happen.
Yeah, that's,
really,
because they were that was going to be the next big thing.
Yeah, I think the asset that was like the focus was this thing called Mount Kare.
Yeah.
And the actual who has actual title to that asset is still so ambiguous. And I don't think the court in PNG has even kind of processed all these different claims. It's a nightmare, and the landowners in that specific part of PNG are like amongst the most sort of challenging to deal with. So, but there are exceptions to the rule, right? It's not all like bad news. There's like on the odd occasion, serious value creation. Like Emerald Resources. Emerald is a $2.5 billion company today by market cap. Share price has gone from literally 8 cents 10 years ago to $3.82 today on the Spark chart. And it's kind of amazing. Like when you consider $2.5 billion, but when they're only producing mine at the moment is in Cambodia, and it produced 114,000 ounces in the last financial year. Like it's a jurisdiction that people have not really been comfortable with too much in the past, but
it's got a similar market cap ounce profile to like Capricorn, effectively, for what they're pumping out. It's pretty phenomenal.
It totally is, and I think that's just like because it's got a backable management team. The execution, was awesome of the mine in a challenging time, but so they've got these 2 development projects in their portfolio. One is in Cambodia again, and another one, of course, in Western Australia, in Laverton. I look at the valuation. I think the market is kind of happy to give them value today for future execution is sort of how I interpret it, just because they've got the execution reputation. But yeah, like it's super. It's like that's a standout amongst the Southeast Asian kind of somber stories. And then you've got this is an ASX listed, but I actually think their management team is in Perth. They're on the TSX, but K92. Have you heard of them? Yeah. They're another tremendous success story. They picked up an old mine in PNG of all places from Barrick. They picked it up, I think, for peanuts. They put money into exploration, and lo and behold, they discovered gold, and a lot of it, and high grade, like real high grade. And like, so I think shareholders, they've had a 20 bagger since the 2018 lows. Today has a $2 billion market cap in Canadian dollars.
Oh,
which
wow.
Is, again, a pretty remarkable success story of the Southeast Asian kind of, gold developers or miners.
I think if they can make it, I don't know what PNG's like, but I know like Vietnam, Cambodia. I know Vietnam's like, if they can make it work over there, like labour is, I think, cheaper than China over there. Like really cheap labour, and I think they're pretty good workforces too. Like got a bit of bit of mongrel in them. So like, God, if they can make these deposits work in those jurisdictions, like I think there's, as you see, look at what Emerald's done. It's there's plenty of opportunity.
I heard the exact same thing last week again. People speaking very highly of the workforce, the attitude and the capabilities in Vietnam specifically. So it was pretty interesting to hear. On the side of, getting the projects going and having the sort of society and royalties and all those things on your side, that they do pay a bit more in those parts of the world. With Kingsgate specifically, $25 of every 100, so a quarter in the all-in sustaining cost was royalty. They said that's obviously
25. Yeah, I just got I'm
a quarter. Yeah,
a quarter. Wow,
it's huge.
I messaged Jeremy to ask if I was remembering the right company, and he goes, "Yes, that's the one." He goes, I did a tweet thread about it maybe 2 years ago, and he goes, "Used to be a $900 per ounce cost mine, and now it is $1,700 per ounce."
Yeah, wow.
Yeah, well, 1,700 and what, $450 comes purely from royalties.
Yeah, nasty.
God, you're right. Well, you look at when you talk about PNG specifically, like look at what I'm pretty sure PNG used to have 10% of Porgera. Now they've effectively taken, I think it's 51% ownership and 53% of the profits or something for Barrick to get that back up and going. And Barrick had to fund all the capex, but like the ore body is phenomenal. Like it used to produce, I think it was
700.
I think it was nearly they got close to 1 million ounces one year. Like it was phenomenal. Like just this honeypot of gold. But with high grade comes royalties.
Absolutely. Absolutely. I mean, if you can make a project work with that sort of shared interest, then
10%. How good would that be?
Speaks to the quality of the ore body.
Yes. Good work, boys. What other bloody...
Maybe the money miners can let us know the ones we missed, the Southeast. Oh, I remember Red 5 selling their Philippines project. Remember that one? They, I don't think it was a mine at that point, but it was Siama.
Right.
Like that. Yeah.
And then you're obviously, St. Barbara, obviously not. Between the...
I forgot about that.
Solomon, then obviously Simberi as well. That's come with, but I think, Simberi's not a knockout. But if you get a knockout.
Oceana Gold, they were in Philippines as well. They were also previously ASX.
Didipio, Yeah, I probably missed a bunch, but I'm curious about the war stories with the Southeast Asian gold mines. Tell me about them.
Oh, we're just doing gold, eh? Yeah, there's other ones there.
Yeah.
Old Scotty Williamson will be straight.
Bougainville, mate, fucking Bougainville. That's a story.
Oh, how good's Bougainville? It's still
listed.
Still listed and puts one announcement a year to say we're still in, still shut down.
Yeah, there was another good article in the Fin, actually, an op-ed about Rio not paying their dues just last week on that one. Very interesting.
Yeah, good. Would you class Freeport as Southeast Asia? You would.
Grasberg, yeah.
Yeah, that's West Papua.
Yeah.
God, find a bloody another one of them.
Irian Jaya.
Holy snapping duck shit.
Yeah.
BRIX, can we count that one? Not ASX. Not ASX.
Do you reckon, like, I know the grade was a lot lower than what they said, but do you reckon, like, with the rising gold price, it might be all right now?
I'm not sure if there was much gold there at all.
Was it just nothing? Like,
they were salting it, yeah.
Just came from the marketplace down.
Yeah. Oh, so there wasn't some low grade that they were salting up to make a bit better?
I think they were panning for gold sort of upstream of the river somewhere, and they were using that to salt the cores. So
right.
There must have been some gold somewhere.
So it wasn't even low grade, not even a halo. Yeah. I don't know.
No, there were geos that were pretty excited about the area that had spent a long time there, but I'm sure you'd find a grain or two by the rivers. I'm not sure about the the systems they were after, though.
We can't say they didn't go down in history. Gold or no gold.
Not for the lack of trying, hey?
Good on you, Mike. All right, love your work, love Axis. There's no bloody salting of core at bloody Axis Mining Technology. They'll just tell you which way it's going and what the orientation is. True as the day is long. Buddy, speaking of moving shitloads of dirt, mineral mining services, bloody VRIFY, ADIA. Register for Drill 24 in the show notes. DSI Underground, Silverstone, CRE Insurance. Need an MPV and an IRR before you talk to them. Greenlands Equipment, K-Drill. Will it be T-Drill if they go to Thailand, maybe?
It's Kingsgate, still K-Drill.
Yeah, it could be. Yeah, that works. Yeah. B
drill for
BK drill, Bangkok drill.
And you spark while you're at it.
Get a spark chart up, yeah. Right, Hootaroo, money miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.